right, welcome back to Mortgage Giants. I'm tall, he's taller. Let's talk mortgages.
Spring market, man.
Yeah, it's heating up.
Feels like it.
Yeah,
It was kind of a kind of start stop. It felt like in April.
yeah,
It just felt like a week of lots of action, and then a week of kind of fizzled activity.
yeah,
But I think now it's here.
yeah.
You know.
Especially with the weather.
Yeah.
Yeah,
Yeah. Weather. I saw too. It's not going to be in like the Alberta market as much. I'm not seeing the numbers of listings going up, but Toronto officially flipped over to a buyer's market.
Oh, really?
BC is soon to follow, and they think that a big part of that is all the investors trying to liquidate their
Yeah.
rentals ahead of the new capital gains
Yeah.
tax rules that are going to take effect the end of June. I think it's end of June. So for anybody that's holding on to rentals or claiming a lot of capital gains, their tax bill on the sale of a rental property would be significantly impacted, especially if they're holding properties within a corp.
Yeah.
If a property is owned within a corporation and gains are realized, they're getting taxed 66% on every dollar. That's a significant
That's a
motivator. So that's going to free up a lot of properties
Yeah.
to hit the market for buyers, and those should be actual owner-occupied buyers.
Yeah.
So seeing some of that activity, and we'll see if that kind of trickles into the Alberta market. But anyway, it's stuff's moving.
Yeah, for sure. And lots of multiple offers, and
Yeah,
because all the people that sat on the sidelines last year
yeah,
are getting in with all the people who are going to make a move this year on top of it. So,
yeah. CMHC put out a report that was interesting, and they talked about just the cost of waiting.
yeah,
People that have decided to wait, or people that waited specifically to try and get to that 20% down payment and avoid mortgage insurance.
yeah,
And the analysis showed, kind of what prices were last year or the year before and what they are today,
Yeah.
and how much you're paying now in purchase price.
yeah,
That the argument is pretty strong that in most cases the person would have been better off to go into a purchase with a lower down payment,
yeah,
secure the property at a better purchase price. Now everybody has to take their time machine and
Yeah.
go back in time. We
Yeah.
always want one of those, but buying, in an increasing market, you want to get ahead of it before prices get too high, and
Yeah.
then you're constantly now you got to save more to make the new down
Yeah.
payment, reality. So it was a pretty cool article
Yeah.
just to see the argument for entering the market when you're ready, regardless of down payment size.
for sure. Like, to do the comparative analysis between insured and conventional
Yeah.
should be when you have enough money to do both as an option,
Yeah.
right? Like, if you only have 15%, there's nothing wrong with that.
You have to remember that you're getting a better interest rate.
Yeah,
If you put anything less than 20% down, you are paying that insurance premium, but you're also getting a better rate.
yeah,
And if you stay in that house, usually by the end of your second renewal term, by getting a better rate now and at your renewal in 5 years, 3 years, by the end of that term, you're getting a better rate for, call it 8 years.
yeah,
You've recouped almost enough to pay off what that premium was.
yeah,
So I think we've talked about that before, but I mean, it's just such an important thing to know. Don't think of mortgage insurance as a purely negative thing that only benefits the bank.
right.
You are getting a better rate, and if you stay in the house for a period of time, like I said, 2 renewals,
Yeah,
or 1 renewal, a purchase and 1 renewal,
yeah,
you're going to recoup a significant amount of that premium, if not all of it.
yeah. And if it's still insured, no appraisal on that next
No.
renewal.
Yeah.
Like, there's other benefits,
Yeah.
but if you're not in a position that you have 20%, that doesn't mean that you have to wait or that it's a bad decision to move forward now.
Yeah, yeah. Does that mortgage payment that you're about to get into compare to what the rental market is, what your current rents are? Rents have gone up,
Yeah.
So can you afford to pay a little bit more between mortgage, utilities, taxes,
Yep.
and build some equity, or do you just want to be a renter?
Yep.
It's kind of the line was put to me a couple of years ago and it stuck. When you enter a mortgage, the mortgage payment is the lowest amount you're going to pay in a month.
Right.
You got renovations, improvements, emergencies.
Yeah.
The mortgage is fixed and it will always be, that's the least amount you're going to pay in a month.
Yeah.
If you're a renter, your rent is $2,500. That's all you'll pay that month.
Yeah.
That's it. Like any, emergencies, the water heater goes, whatever. That's
All on them.
all on the landlord.
Yeah.
So think about that. You got to go into a home purchase with your eyes open and know that, it's not just the mortgage payment.
Yeah.
Can you afford an emergency? How do we? So that might also be the difference between putting 15% and putting 10% down.
Right.
Maybe you do 10% because holding back that 5% for emergency fund and buffer is a good idea.
Yeah. For
So
sure.
to consider that.
And also, like, if you just look back on the history, I'm pretty sure every single person would go down the path, I wish I would have bought sooner.
Yeah.
Very rarely is a person like, I wish I would have held off on
Yeah.
buying.
Yeah, for sure. When's the best time to plant a tree?
Yeah, now.
Or 30 years ago.
Yeah, 30 years.
Yeah, if
Yeah.
you want that shade, you should have planted it 30 years ago.
Yeah.
But today is the next best.
Yeah.
Kind of the same thing goes with house prices.
Yeah.
In a stable, environment. Do I call this stable? Around us in Alberta, I do. Calgary has seen some pretty significant price appreciations, which may have a little bit of regression,
Yeah.
maybe.
Yeah.
But in central and northern Alberta, with the infrastructure that's going in, oil and gas, things are happening around here. I think there's a lot of demand still globally for oil and gas, and no matter what the government
Yeah.
says, in the push towards renewables, there's still such a home for the industry around us that it's going to be supported for a very long time.
Yeah.
I mean, where's the energy come to supply electric vehicles? Natural gas.
Yeah.
I think from a security standpoint around us, purchasing and owning real estate, it helps you safeguard against inflation.
Yeah.
Your property appreciates with time, your dollar depreciates, but because you have an asset that's
Yeah.
appreciating, it's just a way to safeguard against inflation. So there's a lot of pros
For sure.
there. So yeah. So it's exciting. Yeah, but I think it's just people are settling into the new normalcy of rates going to be in the high fours
Yeah.
and low fives for the foreseeable future.
Yeah.
And I think that those mortgage payments are cash flowing for a lot of households.
Yeah.
So
And we could see some positive movement on the variable side of things.
yeah,
This week was the first week that we saw lenders change the discount off of prime in a very long time.
very, very long time.
So,
Yeah,
like, where does that lead us? Like, they've obviously got a little bit more confidence in it for them to be able to give a bigger discount.
yep, yeah. They're making it more appealing.
Yeah.
Which is good. So people, I would say in the last 6 months, as of the last 2 weeks, variable mortgages have become at least part of the conversation.
Yeah.
Now the spread between what a conventional variable rate is to what a fixed rate is, spreads about 0.75, 0.8.
Yeah.
So if the Bank of Canada is going to reduce their prime lending rate 3 times, that's 0.75%. Now all of a sudden you're going to be at par with what a fixed rate would be.
Yeah.
And if you think it's going to go below that, that's when it becomes, a viable option. And I think it will get below that.
Yeah.
It just might take a year and a half.
Right.
Like maybe end of 2025,
Right.
we'll see that prime rate and the Bank of Canada lower its prime rate, more than 3 times.
Right.
Yeah,
But I mean, haven't they hinted that they're going to, in that 4 decrease range
Yeah.
over the next year and a half?
yeah, I think they're still saying 6.
Oh, 6? Yeah.
Yeah, I think if they're trying to get 2 done this year,
Yeah.
and then, and we could do, so important, we could do those 2 rate cuts if the U.S. Fed does 0. They think that we can branch off from what the U.S. Fed does by as much as about those 2 cuts.
Yeah.
So U.S. Fed could stay put, no cuts. Canada could dip by 2. The Canadian dollar will tank. The Canadian dollar will be affected. But they think the pros outweigh the cons,
Yeah.
and we can still do that.
And they've done that a number of times before. They don't
Yeah.
only follow what the Fed does.
Nope.
Like, they make their own decisions sometimes.
Yeah.
Yeah.
Yeah, for sure. They just can't get too far apart. So they're hoping that then the Fed can make their cuts into 2025 because their election is this fall.
Yeah.
So when the election settles and into 2025, they can start to get kind of back to business as usual.
Right.
And maybe then make their cuts. And then that would allow Canada to make further cuts, and kind of play that, yo-yo,
Yeah.
game. So yeah, I do think that we're in a line to see at least 1% within a year.
Yeah.
And then maybe 1.5% by the end of 2025. And I think I'm pretty conservative when with what I read and with the information I glean from those reports. So I think that that's very achievable.
And if they do go down that path, it seems like they're trying to just bring them on par with fixed versus having fixed drop at the same rate.
I think that's going to be likely. I could see that as the result.
Yeah.
Fixed and variable being very much neck and neck.
Yeah.
Through 2025.
Yeah.
3 years ago into COVID, the discount, the variable was almost 2%, I believe, lower than the fixed.
Yeah.
Now it's leapfrog and gone up,
Yeah.
1.5 over.
Yeah.
So I think that, but
Yeah.
it'll come down to kind of more of a neutral par situation, fixed and variable, which will give home buyers a little bit more decision,
Yeah.
tougher maybe. Maybe for some people it'll be an easier decision. For others it's going to be very tough, and they're going to get caught in that analysis paralysis.
Yeah.
What's the best choice? Very hard to answer that sometimes. But you just gotta, it's all about personal situations at that time.
It has to be. It has to be based on your wants and needs. Like, if I feel like this rate is the best and you feel like that rate's the best, that doesn't mean that it's the best rate for them.
Yeah.
Or that person. Like, there's so many other factors to take into consideration.
For sure. We get back into the old conversation of so many life changes happen that cause a move, a sale, job transfers, additional kids, empty nesters. And if you're going to need to make a change, it doesn't matter what the fixed rate is.
Yeah.
You're likely going to need a variable just for the flexibility it brings.
Yeah. There's even an element of taking out all of the financial side and like emotion. Like, I get some people who do not like this process. The documents, the application, the running through things.
I don't like this process.
So they only want to do it every 5 years.
Yeah.
So they're okay with possibly losing a little bit of money for getting a better renewal rate in 3 years.
Yeah.
I'll take the 5 year for less stress, knowing that I don't have to do this for another 5 years.
Sure.
And that is an okay decision.
Yeah.
Like, that doesn't make it the wrong decision because you took the 5 year rate, but rates will probably be better in 3.
Yeah.
I
would. On that note, let's assume that there's always going to be a level of emotion that needs to go into a decision like this. Fixed, variable, 3 year, 5 year. You're going to have a lot of feelings about that.
Yeah.
Make sure you're working with a broker that can give you the math. Mm-hmm. How do we know what the what the fixed rate needs to be in 3 years' time for you to settle for a higher rate today?
Yeah.
And bet on that renewal in 3 years. How do you run that math?
Right.
Can you run that math on your own? If not, ask a broker. They should be able to run that math for you. Same thing with a variable right now. If you're looking at a variable rate and you're going to take a higher rate than taking the fixed, how much does that variable rate need to come down, and how fast does it need to come down?
Yeah.
If it only comes down 1%, but that fourth rate drop happens in year 4, you've lost.
Right.
You've lost. You lost. You should have gone with the fixed all along.
Yeah.
But if 2 rate cuts happen in the next 4 to 6 months, and then the next 2 happen in the next 4 months following that, so we're now at 1% in 1 year's time from now, you would have won that bet. So it's not about how much, it's about how fast.
Yeah.
And how do you calculate that?
Yeah.
That is critical to this decision making. So let's balance that emotional decision out with a mathematical one.
Mm-hmm.
And your broker should be able to do that for you.
Yeah.
Yeah. So it's exciting times. I'm happy to be working with a lot of owner-occupied new home purchasing for families. That's the wheelhouse. And that's the zone I like to live in.
Yeah.
And that's what we're seeing right now. So it's great. People are listing their house and selling it quickly. There's not that stress of, are we going to sell? Like,
right.
They're just like, we're excited to get this thing listed. And how much are we going to get?
Yeah.
So that's kind of fun too.
Yeah, it's a good time.
Yeah. So, leave it there for today? Is that a good place to end it?
I think so.
Okay. Cool. Yeah, good. You guys dodged a bullet. I was going to jump about. I was fired up.
Some rants.
I was fired up about jobs reports and stuff. So this was a little bit more relatable and
Yeah.
better. So
See the fume coming out of Steve's ears.
yeah. So no, that was good. Better.
Yeah. All right. Thanks for watching. Thanks for listening. See you next time.